Welcome back to Explain the Charts, everyone. Today, September 11th, 2025, we're diving into an in-depth analysis of Ethereum, ticker symbol ETHUSD, balancing the current news cycle with the raw data on our charts. Let's begin by looking at the broader picture on the one-day chart to set our context. Recent headlines are buzzing with growing excitement around Ethereum ETFs, with reports of rising inflows and record trading volumes. CryptoRank indicates that ETH's spot market share has even briefly surpassed Bitcoin's, a significant milestone. This institutional interest is a major bullish catalyst, driving expectations for a potential target of $6,800 for ETH in Q4 2025, supported by substantial investments like Bitmain's additional $200 million into Ethereum. However, there's also an ongoing Ethereum dying debate, fueled by a sharp decline in network revenue, which Messari analyst AJC highlighted as a 75% drop from August 2023 to August 2024. This revenue slump is partly attributed to the Dinkin upgrade, which reduced Layer 2 transaction fees, impacting Ethereum's direct income. Despite this, on-chain metrics show stablecoin supply at an all-time high and continued Layer 2 scaling, suggesting a flourishing decentralized financial system. Broader market sentiment is also influenced by softer-than-expected U.S. inflation numbers, potentially leading to a Federal Reserve interest rate cut, which generally bodes well for risk assets like cryptocurrencies. These mixed signals paint a complex picture for ETH, where institutional adoption battles with questions about core network profitability. Now, let's turn our attention to the daily candlestick data for ETHUSD, observing how these news narratives may have manifested in price movements. Looking back at late 2024, specifically from early November, we see a strong bullish impulse, likely driven by the initial ETH ETF speculation, pushing price from around $2,400 to peaks above $4,000 by December 2024. This surge culminated in ETH hitting a new all-time high of $4,953.73 on August 24, 2024, as noted in the news, before a significant retracement began. The subsequent period from January to April 2025 saw a substantial correction, dropping prices from over $4,000 down to lows near $1,400, perhaps reflecting the Ethereum dying debate and profit-taking after the initial ETF hype. However, since the low in April, ETH has shown a robust recovery, especially through May, June, and July, indicating renewed investor confidence, possibly linked to fresh ETF inflows nearing $10 billion and increased trading volume. Identifying key price levels on this daily chart is crucial. We can see strong support forming around the $2,300 to $2,400 range in early September 2025, which held up after a brief dip. On the upside, a significant resistance level appears around the $4,000 to $4,200 mark, previously acting as both support and resistance during various phases of the market cycle. Another critical level to watch is the previous all-time high around $4,950, which would serve as a major psychological and technical resistance if ETH attempts to break new ground. For now, it thus seems to be consolidating within a range, largely between the $4,200 support and the recent highs around $4,500, post the strong August rally. Let's switch to the one-hour chart to examine the shorter-term price action and identify more immediate trends and reversals, focusing on the period from August 22, 2025 onwards. Here, we can clearly observe the consolidation pattern that has developed after the strong upward move in early August. The price found initial support around $4,200 on August 22, and subsequent dips have been met with buying interest, establishing higher lows. The overall short-term trend is mildly bullish, indicated by these higher lows and attempts to break above minor resistance levels. Notice the relatively steady trading volume, with occasional spikes during periods of upward momentum or testing of support, indicating active participation. Now, let's zoom in further to the 15-minute chart to analyze the very recent price action, specifically from September 10th, 2025, between 12:14 Universal Time Coordinated and 14:14 Universal Time Coordinated. This particular range shows a notable bullish impulse. Price started around $4,335, quickly breaking through minor resistance levels with increased volume, peaking near $4,450 before a slight pullback. This rapid ascent, followed by a minor correction, illustrates the high volatility nature of intraday trading for ETHUSD and how quickly sentiment can shift. Traders should look for such sudden volume increases accompanying strong candle closes as potential entry signals for short-term long positions, always mindful of immediate overhead resistance and setting tight stop losses. Back on the 1-hour chart, we see that after this short-term volatility, the price has generally returned to a tighter range. The $4,300 level has acted as a consistent floor over the past few days, with multiple retests showing strong buying interest. Resistance on this time frame is currently around the $4,350 to $4,380 zone, preventing sustained upward movement. A breakout above this $4,380 level on increasing volume could signal a short-term bullish continuation towards the $4,450 mark. Conversely, a sustained break below $4,300 could see ETH retesting the $4,200 major support identified on the daily chart. For long-term investors, the bullish case for ETH remains strong, primarily driven by the increasing institutional adoption through ETFs and its dominant position in the stablecoin market. The narrative of Ether as a yield engine, as discussed in news reports, suggests its fundamental value continues to grow, even if transaction revenue experiences fluctuations due to Layer 2 scaling. The potential for a Federal Reserve rate cut later in 2025 also provides a tailwind for the entire crypto market, which could propel ETH to higher valuations. However, the Ethereum dying debate highlights a key bearish point. The network's direct revenue model is evolving, and unexpected shifts in Layer 2 adoption or other fundamental changes could impact its long-term profitability and perception. Short-term, volatility remains high due to market sensitivity to macroeconomic data, Bitcoin's price movements, and regulatory news, such as Japan's crypto tax overhaul or the SEC's proposed Project Crypto in the US. In recap, key price levels to monitor are the immediate support at $4,200, followed by stronger support around $3,800, and critically, the April 2025 low near $1,400 in case of a major market downturn. On the resistance side, look for $4,450 to be retested first, then the significant psychological barrier at $4,800, and finally, the previous all-time high near $4,950. A breakout above $4,450 is moderately likely, 60%, if sustained buying volume enters, particularly if positive news regarding ETH ETFs or broader market sentiment improves. A retest of $4,200 support is also moderately likely, 55%, if current consolidation breaks down, reinforced by any negative macroeconomic news or a significant Bitcoin correction. We believe there's a strong likelihood, 70%, of ETH challenging the $4,800 resistance by Q4 2025, especially if the anticipated Fed rate cuts materialize. However, there is a low probability, 20%, of ETH breaching its ETH in 2025 given the current revenue concerns, unless a new, major bullish catalyst emerges. Traders should continue to watch global inflation reports and upcoming Federal Reserve announcements closely, as these will be significant drivers for overall crypto market direction. Additionally, any further news on regulatory frameworks for digital assets, particularly from the SEC or international bodies, could introduce new volatility. Keep an eye on the volume. Sustained high volume during breakouts or breakdowns will confirm the strength of the move, offering clearer trading signals. Remember to manage your risk carefully, especially in highly volatile markets like Ethereum. Thank you for watching Explain the Charts, and we'll see you in the next analysis.